Right, here we are live, Return on Life once again. Sebastian, welcome back.
Hey, Peter. Thanks.
All right, we're back from a long weekend. We're still on the topics of why nobody needs insurance, right? That's kind of the overriding topic we've been talking about the last number of weeks, and this one we're going to get into is, reduced relevance with age. So, I am of a certain age. I've got retirement savings. My kids have left the house. They're financially independent. Why the heck do I need insurance? Right. The other part to it, I think maybe so that's getting you're old enough. The other one is like, I'm too young. I'm like, like I don't need insurance. I don't have any dependents and all that too. So there's a bit of that as well. So I think age can go both ways, right?
Yeah. And that's a great one. So if we tackle the old part, so
Yeah.
as you get older, yes, you start having accumulated assets and less burden on your income because a lot of it's all income driven. So less burden on that income going out in mortgage payments and in whatever that your lifestyle is based upon. So the kids, if you have children, they're out of the house. So really, you don't need insurance, and you could just take your assets and divide it up, amongst your family members when you're not gone, and hopefully there's some money there left to give you a nice little burial.
Yeah. And
When
I
you,
just want to spend what I have. I've got
Mm,
enough there. I don't need another expense. Right. And maybe this is kind of maybe it's the mindset piece of perception that life insurance is an expense,
mhm.
and it certainly can be the way, however it's used, but the way that I mean, I guess everybody's a little bit different. So we're getting into this. This is like not this is how you should do it or anything like that. We're just having a conversation. So, um, I think of it as like. Um, the way that I typically work with my clients is think of it as an asset, right? And that is a big mind shift of an expense versus an asset. An asset is something that will, to me, if you're working in the world of life insurance, it's an asset that contractually grows every single day, tax free, right? It's building another asset into your portfolio. So it's not, we're getting, it's just a bill that's going and paying out the door, and we won't see anything at the end.
Yeah, and I think that's a great way of putting it. And if we think about, in Canada, anyhow, RSP, tax-free savings account. You've got your own company pensions, which is less and less, but there's a tax portion that exists outside of like a tax-free savings account. You don't have that issue. But what happens now is you've built these assets. You don't have any need for the insurance, you think, but then your loved ones are inheriting your retirement savings because we can't time death, so we have
Mm,
no idea when we're going to die,
mhm.
and usually it's the most inopportune times. Opportune is not a really good word of describing it, but it happens when you least expect it.
Mm.
And so oftentimes you'll see people will buy insurance just for the final expenses, just to take care of a small portion of giving back to their family members or taxes or whatnot. But the flip side is as you age, and if you're fortunate to be accumulating more assets, the last thing you want to leave is your family burdened with 50 cents on the dollar, let's call it, of all that you've worked hard for. So oftentimes, as you talk about, another asset to protect your assets that you've accumulated from erosion of taxes.
Right. So there's more. To me, it's not that. Again, we always go back to this. We're good tax-paying citizens. We're going to pay our taxes,
Absolutely.
absolutely, but we shouldn't give them, in my opinion, more than what we should have to. And adding this in, allows to, like as you said, if you are, yeah, maybe your kids they're financially independent, but you don't necessarily still don't want to pay CRA more than you have to, right? Or I think of like the three ways that I think of money and how you spend it in your later years. You're thinking of, I'm going to spend to the end. I'm going to spend everything that I have and not leave anything. That's fair enough. You want to enjoy life. Maybe you're sharing it with your family as you experience it, right? The other one is, um, you want to pass down to your family, right? But to me, like, how do you maximize it? This is something that we can use to help maximize the outcomes that you pass down. And the other one is to charity, right? How do you provide for others? Maybe you don't have other family members, or your family's well enough so you don't want to, but charity is another great way.
Yeah,
Integrating that tool into this gives you maximizes your outcome or your impact, really.
100%, 100%. And at the end of the day, too, it's, if we go back to the young mentality, which, you're young, you don't really need insurance
Mm,
because you haven't accumulated any assets. If we look at the asset, part, the risk mitigation part, but if you're no longer here when you're younger, you probably have, some kind of dependence, not depend, well, some sort of independence. Like if you look at a university student, you're going through school, your parents usually are shoring up, the funds to pay for university, and some people take it on their own. But then there's a financial burden that's left. So, do you owe it to your family members, your parents, let's call it, to take care of that? Or the other side is, when you're young, we just look at the health side, because you could have all the money in the world, but money can't buy you insurance. It's your
mm,
health.
mm.
And so when you're younger, there's less issues. So maybe it makes sense to buy it. And again, you don't have to, I know you talk about the asset aspect, Peter, but when you're younger, the optimal way is to buy as much permanent as possible with a lot of term for your coverage. But maybe there's limited income. So
Right.
the worst thing, the least you could do is term insurance and protect yourself. And then what I love, and this is advisors from years ago would always say this: once I've got the insurance, I never have to worry about underwriting again. So if you
Mm.
buy enough for them, many companies offer contractual provisions to convert those policies. You got to make sure that it's convertible.
Convertible and at what term? So we're getting into that
Yeah.
contract understanding, because yes, not all conversions are equal, but that's a whole nother maybe discussion we can have. Yeah, age on the young side, you're not thinking about mortality, like, or any of those things, right? Like when I'm like 19, I'm not thinking about dying by any means.
So,
But I bet you're probably saving, money in an RSP or a TFSA, right? Or if you're running a business, you're probably trying to grow that business. This is a tool that we use to complement anything. So it's not, instead of, you know, charity, instead of passing down, instead of, spending to the end, we use it as a complement to whatever you're doing. And I don't know, you name me another asset that you have in your portfolio that allows your capital to grow tax. I mean, it's tax advantage, but if you use it in the right way, it can be tax free and pays out tax free, right? You're able to use it while you're living too. When you're spending to the end, it allows you to do that. So those are other topics we can maybe dive into, but it's more about the idea of this conversation was just say, like, yeah, there's a lot of reasons why you may not want it or think you need it, but if you have an expanded discussion, there might be ways that you can see that you can. It's not instead of. It's how do you potentially add this to make your experience better.
yeah, and like the flip side too is, you may want the insurance, but you may not be able to get it. So as you
Mm,
age, things happen, right? We
right.
see this. There's some individuals who become uninsurable. So now you just reduce that ability to use, a tool like insurance to protect your family and your assets, but you can't.
Yeah. Create opportunity for your future self. Right.
Mhm.
Really.
Absolutely.
Yeah. So good. All right. Well, let's wrap this one up for this week. Any other closing thoughts, and how can people get a hold of you?
Yeah. I think one of the closing thoughts I would say is know who you're working with. Interview a few advisors. Peter, I love what you bring to the table, and sometimes it's go out and seek it because you're probably going to need it sometime in your lifetime. Even if you think you don't need insurance, you will. So seek advice. Interview a few advisors. Ones that make sense to work with. Work with them. Many, many, many great advisors in our business, just like you, Peter. So that's what I would say. And you can reach me through LinkedIn or Sebastian S. Karag at equitable.ca.
Amazing. Yeah. And yeah, thank you for sharing your experience with us today. And yeah, we look forward to next week. I think next week we're going to go through the cost factor of it. But for, just what we're doing here is creating discussion for people to, creating ideas for people to have discussion, I would say. So, yeah, again, if you want to reach out to either of us, please do so. And I can be reached out on LinkedIn as well as Peter at returnonlife.ca. Bye for now.
Take care.